Aquino, Vice President and Head of Fixed Income Trading at Security Bank and Trust Asset Management. So good seeing you, Dino. Welcome back to the program.
Morning, Kathy. Thanks for having me again. Via Zoom this time.
I know, on Zoom, and you got that
Yeah.
right at 1.7%. I know you did a couple of days back. So what do you make of the result for the inflation for September?
Yeah, I agree with Jonathan. It was a pleasant surprise. So apparently my Galunggong indicator is very reliable, but just joking around. But I think it's a pleasant surprise. So generally, we're still generally we're still in a very good environment despite the recent uptick in inflation in the past 2 months. So at least it gives the BSP some ample room to ease further this year. So our call is a hold this month, but I'm not sure with Jelly yet. I'm chatting with him actually, but he did revise our full year target to 1.7 on the inflation.
All right, so why is there still uncertainty? I mean, it sort of solidifies the possibility and probability, as you heard moments back there from Jonas Ravelas, of a 25 basis point rate cut. But you're still holding on to a stay that the Banco Central will not move on Thursday, despite the
I
good
haven't,
inflation
yeah,
results.
I haven't really discussed it with Jelly yet, but I think that there's the possibility already for the BSB to do a preemptive cut given this number. In fact, as Jonathan mentioned, the IMF recently lowered our GDP forecast to I think 5.4, if I'm not mistaken. So I think this would be a preemptive cut if the BSB does reduce policy rates this week.
Okay, it's a preemptive cut on possibly which drivers. Is it just inflation? Because we have a lot going on. There's the floodgate, as Jonas made a mention,
Yeah.
and there's also the government shutdown in the U.S., which has entered
Yes.
its seventh day. And the last time that happened was like in 2018, and we went on for
2018, yeah.
35 days.
I think this one would last longer than 35 days, if you ask me. uh, just guessing on what Trump would want the market to at least see is he wants to prolong this. If you notice his tweets or the way he behaves, he's playing hardball with the Democrats. So I think just by gauging how he performs his talks or how he talks to his other counterparts, I think he's playing hardball and he wants this shutdown to prolong as long as he can.
Okay, so how might the narrowing interest rate differential then between the Fed and the BSP, let's assign the probability that the Fed will cut a lot more and that the BSP might be compelled to cut because of that. What is that going to mean then for capital?
It's going to be very good for capital. I think at the end of the day, even though we decouple slightly, I know we've been discussing the decoupling story for a while, as early as February or January. But I think at the end of the day, we really are still very much dependent on what the Fed will do. Their interest rates remain very elevated, say US Treasuries remain high, or they are still on a cautious approach, we will likely do the same. So if they move a little bit more dovish, we'll likely do the same as well. So supporting growth is the main factor at this point. So I think there's a possibility that the BSP will reduce also this month.
How's the bond market looking so far in the first few minutes after the September inflation result?
It's quite defensive, if you ask me. Which is not a surprise, given that it's quite, as you know, last month, September, we're the worst performing capital markets in the Asia, in currencies, bonds, and the stock market as well. So everyone is a bit cautious given the recent political concerns. But I guess once the currency finds stability, it's still at 58.35, and it's keeping investors at bay and not entering the Philippine market as of yet.
Yeah, I know that, when yields started to fall below 6, and that kind of showed the extent of the risk aversion that went on for a couple of days.
Yeah, I think it's a combination of a lot of things at that time. There was this news on the JP Morgan, the Fed market pricing in the Fed started their first cut then at September. So it's a combination of good fundamentals, a good story for the bond market. But unfortunately, it kind of reversed a little bit. The JP Morgan story fizzled out. Now everything is focused on the political issues and, of course, the recent, the recent uptick in inflation.
So does that take away our chances then, or reduce our chances to be included in the JP Morgan bond index next month?
I don't think so. No. No. We're in the watch list already, so we already are in the watch list. The inclusion will happen in around 6 to 12 months. So the first step is to be included in the watch list, which we are already in, and then they will likely deliberate if we're going to be included in the next 6 to 12 months. So I guess if the political noise fizzles out, our chances to be included is still very high.
One of the silver linings, and Jonas made a mention of this, is the corporate bond issuances. A lot of debt issuances coming from the corporates. We have MPTC offering 15 billion pesos in fixed rate bonds with an oversubscription option of up to 5 billion. And there's also Toyota Financial Services launching a 2 billion maiden bond offering. What do you make of these?
And our bank also is offering.
Exactly. Security
I
Bank.
have to plug it in. I just have to plug it in. But yeah, I think as it's a good time to invest for investors. It's a perfect time. Yields are generally still very much elevated. So I think corporates are trying to strike while the iron is hot. The demand is very strong on every issuance that's been offered in the market so far. So I think once, given that the yields are still very high and there's interest on the general public when it comes to the bond issuances, corporates will continue to offer these bonds right now. If I think Jonathan mentioned the possibility of another 50 basis points cut next year by the BSP. If yields continue to fall BSP, then I don't think the demand will be as high as where it is right now. So at this point, I think it's an opportune time for the corporates to start issuing bonds with the demand very, very high.
All right, well, we'll leave it there and come back to you in maybe 48 hours and see how it goes with you on a stay, Jonas on a 25 bips rate cut. It is a divided market out there. Thank you so much, Dino Aquino of Security Bank and Trust and Asset Management.